through it on demand via our Bloomberg Radio Plus app, free for iPhone and Android devices.
For months and months now, it has seemed the bull market has been driven by the Federal Reserve's stimulus moves. And now that the central bank plans to start paring back its bond buying, stocks just keep rising to all-time highs. So what's behind the strong performance now? For a discussion of that, we're joined by Manoj Ladwa, head of trading at TJ Markets in London. Good morning and welcome. If it's not stimulus that's fueling the current run-up, what is it? Could it actually be some fundamentals?
I think so. Morning, Bob, by the way. But I think so. I think the fundamentals have been steadily improving for the U.S. economy. We saw jobless numbers coming out only yesterday, and they're improving. Unemployment seems to improve. The housing market's on its way back up as well, and I think the market was expecting at some point for the Federal Reserve to start reducing the stimulus spending. Now that they've announced it, that takes a large amount of uncertainty away from the markets. And as long as the fundamentals improve for both the economy and corporates as well, I think the bias can still be to the upside. And we know that interest rates are likely to remain at depressed levels for a sustainable period of time.
All right, that's positive right there. Hello and welcome in from Sunnyvale, California. I'm Mark Vierra. This is my weekly, sorry I missed last week, but this is my weekly addition to my trading log. Got all these images here that I'm getting ready for my weekly log, and you can go to my trading log. I'll have links for you for all this stuff here if you want to check out all these charts. YouTube users, if you go to my video and the About tab and show more, you'll see that I'm going to provide all these links for you. And so this is a technical analysis video. This is just for informational purposes only. I'm making no buying or selling recommendations. I'm going to just, we'll go through your basics like trend lines, some moving averages, fibs. Excuse me, I'm eating a cough drop. Pardon me, sorry about that. So, your basic fundamental, trend lines. This is very, very basic principle, but it's amazing how these trend lines can help you out to find support and resistances. Of course, I'm looking at the S&P 500 and using that index as the popular index to use. This is what I want to focus on these videos. And starting off on this green dashed line is an important pivot where previous monthly candle broke above that. This is a long-term monthly chart, by the way. And now we're below that, so we're dancing around a pivot line. Okay, this is what these trend lines do. And this trend line here is marking, a higher low would coincide with 1795. I'm not sure if we're going to see that anytime soon or not, but it's a possibility. And we have it marked. And let's go in here. This is a weekly. These are weekly candles. Sort of the same kind of pivot line I'm looking at on the monthly. This shows a different view on how the weekly is reacting. And the more times this line is tagged, the more probability that it's going to break that, which it did. Found it as support. It's another tag here. And now price is up here. We're going to look to see where else can we draw trend lines. Well, this is the first one that comes to my mind here is this yellow, orangish yellow, whatever. Support at the dash pivot. The weekly is putting in a higher low and a higher high. So despite this bearish candle, which I think is actually healthy for the bullish scenario. So we have a little bit of consolidation. We should expect that. We should want that. If you're bullish, you want that anyway. I would love to see the market tank, but we'll look at volume later, and it's not supporting that thesis at all. Not at all. Let's see. So off of these highs, we're going to look at that as a pivot, and we're bullish above, bearish below, and we'll see if that that pivot holds or not. And this is your intermediate to long-term weekly trend channel. I'm going to look at that same kind of thing here on the daily. This is what I like here is looking at fib prices from the low to the high. Consolidation back marks the end of this tool to show extension. So 50% would be half of this leg, in other words, added to this bottom marker here. 50% fib retracement or extension is an important key marker. Yeah, somebody's voting on my poll. Where am I going with this? Let's see. So 23% is important, and 50%. All these numbers are important, but remember now this 23% now, because let's do a retracement. The last retracement would be from the previous high. I'm just showing you this because that's where we found support right there at that 23%. So now let's go to the next, from this low to this high. That's where price is right there, found support at the 23%. Now if we go for a longer term, let's see, let's take a more intermediate look at a retracement and look at that 23%. We get 1801. Remember that number now, 1801. Okay. Here is this daily channel. We have 1, 2, 3, 4 touches on the lower end. We got 1, 2, and we almost want to call that a touch, but not quite. Luckily, we're pulling back because I think I'm bullish in the market, and I think that's healthy. Now, this is turning into more of a wedge if we focus in, and we can see that the touches here, and we got 2 touches here, and then we're pulling back. Now, I'll get into later in volume here, but this is a wedge that we're looking at. I don't care about that. Andrew's pitchfork is always a fun tool. Kind of tricky. You can mess with Andrew's pitchfork for hours, but I changed this around. I think this is the most important one that I'm presenting here, showing an upper and lower channel. Of course, we're in the upper channel. Moving averages, not much to see. These are shorter term, 5, 9, and 20-day moving averages. But what I like about moving averages here, I'm going to close this. Let's open that. So open that up with my GIMP tool here. All right. So what's cool about moving averages is it will give you some landmark, no-brainer. You can look at the previous, when price falls below the 20 and 50 day, where it crosses, this sort of stuff you can analyze and look at previous buying opportunities. And the last one is right here. Price gets below the 20, and it bounced off the 50-day moving average. I'd love to see that. Price could get down in here. I think that would present a great opportunity. So that's all about moving averages. Nothing really, special about moving averages in terms of trading off of them. But let's see. All right, for patterns, we had a lot of targets met off these previous. This right angle broadening into sitting pattern, this round bottom. All those patterns have been met. The only really pattern I'm looking at developing now is we can see the long flagpole on this bull flag. You can kind of make out a rounding top, okay? But now I'm going to reserve putting measurements on this flag until I see which way it breaks, one way or the other. So not much for patterns. That's about it for patterns. Of course, look at candlestick analysis. I think I want to open up a SPY. SPY is an ETF that follows the S&P 500. It's very popular with traders, and this is what I look at with volume. My other choice would be the ES, And ES gives me pretty much the same kind of candles, since the difference is in the SPY, you see more gaps reflecting the overnight futures, and when the S&P 500 opens up for daily business at the New York Open. So since I want to see a little bit of a contrast, this is why I'm looking at the SPY. It just gives me something different to look at, because I want to see volume, and SPX isn't going to reflect that. So I'm going to use the spider. What am I looking at on this profile is, first thing right now is, this is a high volume node right here, and I was pointing out that these high volume nodes make for great pivots, bullish above, bearish below. So we are looking like we are in bearish territory, but I would argue that it's going to be muted, and I'll tell you why. Especially when we get into intraday monkey bar charts, that's where it really becomes a bit more clear. But we're finding support on this value area. Our candles are bearish, but I'm seeing bullish in that weakness. Okay, the strength is measured in the moves lower, and this is what I see is a higher low. Okay, off of these. And a lower volume here. The other important thing too is this previous climax. Here was a selling climax, and we're just nowhere near that. This is just weak attempt. I hear the talk about the beginning of the year and we're bearish. Oh my gosh, we're going to have a 10% correction, and I just don't see that volume is confirming that thesis. I don't believe so. I think I'm seeing more bullishness in this move lower, and I think it's healthy. Support at this upper value area. The other thing too is our point of control. Our profile boundaries and value areas are moving upwards. So we're building a structure. We'll see possibly more of a D out of this, and that is a good strong structural profile to look at. Now let's close this. Just real quick look at the intraday volume profile before I get into monkey bars, and just confirming a decline in volume. Not much else I'm looking at. This just the bearish momentum is slowing down as volume is declining. This was a high volume node pivot. Now it's turned into a point of control. So this area here is fair value, and not much else I want to look at that chart. Let's see, the one I want to look at. Alright, this is intraday 10-day hourly SPY monkey bar, which is a market profile, and I've already looked at volume. And the main thing here is I'm looking at the playground areas and how these two are overlapping. Okay, that's stomping down a base level is what that's telling me here, and you can see price is just below this volume node. It's right there about the TPO, time price opportunity. This node right here I think would be a pretty strong support. The other thing to note is a lot of times there's just no volume in here. Okay, so couple that with the weakening volume in this move lower, and that we're likely not going to find any interest in this area. I would be very surprised if we broke down below this just lack of interest is what that is. So again, volume areas, these playground areas are overlapping. That's showing a flat base formation where the market is trying to find a nice base level. I think we will most likely bounce off of that. I am expecting, what I'm pretty much expecting is, I think this week will probably continue maybe a little bit of a move lower, and I think we're going to end up the week on a positive note. And that's my guess. Okay, of course, I'm pretty neutral. I'm not too sure in terms of conviction levels, and semi-neutral to flat to up, I think, is what I'll be voting in my poll. So, and let's look at U.S. Treasuries. Okay. U.S. Treasuries is sort of a safe haven that's losing favor lately. I think I'm expecting lower Treasuries, relatively stable. But I do think that this head and shoulders is going to eventually play out. And we've seen a breach of the neckline already. So that's sort of a confirmation. It's trying to poke above. I've seen an up thrust candle here. But little bullish divergence in the background. I think maybe might return to the point of control and then move lower on Treasuries. And what that will do is that's going to increase the yield. This is one of the most singular events in the market right now is this yield is getting up to high levels, and that takes interest away from stocks. And stocks have been stalling at this upper levels, and I think it's a combination between that and the U.S. dollar. All right. Now, what is the U.S. dollar have to do with stocks? Okay, that's a good question. And then there's a typical and natural inverse correlation to the U.S. dollar, and there's several reasons for that. Right now we have a strong U.S. dollar, so you could say stocks aren't down, the value of the dollar is up. Okay, several reasons for this inverse correlation, and that's one of them. The other being that the U.S. dollar is the global safe haven default reserve currency, so whenever there's uncertainty, liquidity is going to flow into U.S. dollar and Treasury assets. Okay, and then you have global central banks. It's in their interest to prop up the value of the dollar, so they don't want their currency to strengthen against the dollar, or their exports suffer. So I can easily make this a 2-hour video on currency wars, but I'm going to really have to restrain myself from doing that. The basic thing here is we have the U.S. dollar breaking out of symmetrical triangle, strengthen the U.S. dollar. When the value of the dollar increases, goods, services, stocks, commodities, that price decreases. So especially for something like gold, you have a weak CPI index and a stable dollar, of course gold's going to go down. You know, gold bugs really, they need to see the US dollar plummet, and that's just not going to happen. That is just not going to happen. So get into my my euro trade is paying off. Had some obvious blow off the top signs here. This is just textbook high volume on an up thrust like this, and I was aggressively shorting the euro. But I want to focus on now the managing of this trade. I'll get into that. But what we have is this key pivot breakdown. Okay, and we're having a declining volume, so it means the late to the party, you know, are entering into the short trade. So we see that the speed of price, the market is sped up, but it's declining. When it's going to stop, no one ever knows. That kind of thing. We could find support at the point of control. I think we're likely going to breach that, but we'll have to see. You know, that's where it comes into managing the trade. And what I do is I scale in. I set my max was 6 lots. Right now I have a half a position. I had 4. I had another lot down here where I did a damage control take profit, which triggered right here, you know, while I was asleep. But in any case, that's good. So that raises my average price, reduces risk, and in case it moves, the euro were to move against me, then I could enter that, which I did, and so I've cycled out of this fourth lot a couple of times already. I've taken you know, some pips, and now the next step now is these remaining lots. I will end up setting what I call a variable trailing stop per lot. So these two right here will probably get about, since what I'm 217 pips to the good average price. These I'll probably set at a 50 pip trailing stop, and this one at 100 pips trailing stop, and that's pretty wide. What I'll do is I will wait and I will adjust that trailing stop. What I will do is I will tighten that up as time moves forward, and you know, I'll tighten that up. Usually I'll go in like 20 pip increments. So this 50 pip trailing stop, if I have further downside, I'll move it to a 25 pip trailing stop, and that, you know, 25 pips isn't much in Forex. That will probably trigger. This one here, I will try to hold on to as long as possible. I will, you know, keep tightening that stop. But that's the last one that I'll want to get rid of. And that's how I manage the trade. So that's what I'm doing. I think, is there anything else I want to cover here? When at YouTube viewers, I will have links. Hey, check out Reddit here, subreddit StockMarket. Some good discussion going on in here. Of course, you can find me at HotStockMarket.com. I got links to the Stock Market Today section. You got great discussions in there. That's all I got for a video, and I hope to see you on the board.